Well, good day all. Ira Epstein of Linn Associates with your financial market wrap up for this Monday, and we're at the 29th of March, 2021, and we're just after 6:30 p.m. Central Time. We had 15 minutes ago, 20 minutes ago, I was literally on the last charts of these, and the whole house went dark. The whole block went dark. I walked outside, everything was dark. Here's the great news. I don't know if you have power surge protectors and backups. Everything started beeping in my house. All my power surge units did their job, and the backups, I've never been here when it happened. You know, it happens in the middle of the night, things like that, and it was wonderful. I watched what was going on, and it worked really well. Thank you, technology. All right. So we are talking about technology. What about what's going on in the energies? You know, the Suez Canal got freed up today. So that's going to be the headline news for a while. How could they let one ship do that? Well, I don't see how you can stop it unless you want to widen that. And those days are going to take very difficult. They've done a little bit of modifications, but that would be pretty hard. You know, and it just proves you got to bring things into the world. Maybe there's a better way to have location, but you can't get it all. Minerals, oil, things of that nature, how are you going to do it? So it gets difficult. As for the stock market, it's a tale of two cities, right? Like that book cover? Remember, you've got the Dow and the S&P in their own world. You've got the NASDAQ and the Russell in the weak world right now. Metals don't have an inflation story. It's that simple. And without it, they are lagging, and the gold market is trying to get back in under that 1,700 level. The dollar wins by default on the COVID cases worldwide. We're just about at 3 million people getting vaccinations a day. So our numbers keep going up. The president keeps taking his victory laps around that. I get it. And, you know, we want this to be over. And I can tell you, I don't know if you've eaten out, but in Chicago, I went out over the weekend, couldn't wait to go out. I probably haven't eaten in a restaurant outdoors for 2 weeks, 3 weeks. And the ones you do, it's been hard. Well, things are very much getting back to normal. And the one complaint that I had from the owners, because, you know, you go in, you haven't seen these people in a long time, getting help back isn't easy. But from busboys to waiters, not everybody's wanting to come back so fast. They're getting that government check. They're just going, I don't know that I'm comfortable with it yet. We'll see. Some of these jobs are high paying. We'll see how long those last. I would say all the high paying waiter jobs are being filled, but the lower pay, I understand what's going on. So let's go to the charts and hope that I don't lose my electricity again. Don't know what went on, but it was the whole block. I know I paid my bill. Everything up. So you still have your bias. Bias is so important. You have to have a way on a chart besides just looking at it and you've decided, well, it's an all-time high, it's in an uptrend. Duh, we know that. But where's the bias on the corrections? Do you have something that helps you to keep your sanity about you? Is that the right word? And so far, we haven't been able, other than back here at the end of October, beginning of November of last year. We had one break. And other than that, you'd have to go back to last May to have a break where you were underneath. And once you got over it, that was the only one, and then you came back. So we know it's been bullish. When you look at this chart, we just went through this pattern like this. And what we were talking about is I thought there would be stiff resistance up here. The market has come back, and it is now challenging that. That's just what I expected it to do. Now, if it wants to pick up and run, we'll see that, and we'll see that very quickly. The pattern of the chart got broken in the downtrend. This is what a downtrend looks like. Lower highs, lower lows. You can't argue that. The market came back up, and Friday, a big rally in this market, knocks the trend out. Downtrend is over. It doesn't mean an uptrend has begun. And here's what the market's doing. It's fighting that battle just at the numbers that we spoke about. The market is over the 18-day average, and you tell me the number you thought this fought at. You hear me say it all the time, that the 18-day moving average should be considered by you to be the line in the sand. It's where markets decide to make battles and tell us what they're going to do. Then we go into the resistance support zones. Now, you know I'm doing an enhanced Bollinger Band course. It's finished. So my IT people, they're putting it on our website, they're checking all the billing, making sure that the paid subscribers get their discount without any codes or anything like that, and away we go. They'll let me know when I can do the mailing on it and when I can start talking that it is now released and how you can view it. But you got a lower low and a higher high. The resistance is the 403.25 area, supports back at the 39.12.5 zone. When you take a look at momentum, you're overbought. So you have an overbought market that on Friday stepped out of its downtrend. It's churning in here. Those are your resistance and support zones that I've labeled for you. In the NASDAQ, you can see how the market's holding each test of the 100-day average, the combination actually of the 100 and the 18-day, but it's staying in an overall downtrend. You still have the pattern of lower highs, lower lows. What it was able to do last week is it was able to come up on Friday and close back over the 18-day average. Now, do I think that the pros went short here? If you're a subscriber to my morning videos, I answered that question for you, and that's where I'm going to leave it. Right now, the pattern lower highs, lower lows, as you can see. In the Dow. So in the Dow, here's a market, I believe it's an all-time high. You're up, you're overbought. You've got both numbers over 90 tonight, but you can't count tonight. You got to go to Monday to see where the slow stochastics finished. Both numbers were up and over 80, but they weren't the day before. So you're just an overbought market. You had a big rally today. Tomorrow's Tuesday. Be careful. Markets like to start off strong and go with it, but those Tuesday reversals are very famous in these markets. That's all I can tell you. I have no reason to be bullish or bearish. I have upside bias. I have an overbought market. In the Russell, the market's lower highs, lower lows, but I think right here the pros covered their shorts, and I think they went to the sideline because you're oversold. And oversold conditions don't beget further selling. They typically wait to see what that's going to get you, and as long as either one of those numbers in the slow stochastic are under 30, I think that's where they covered. In the VIX, we now have a pattern of lower highs, and this is a lower low than that. You've got divergence because the embedded reading turned up, and you can see right here the market turned up today, Monday. And when it did so, it went right back to that 18-day average. That's all it actually owed, as I call it. And now it's got to fight a battle. It turns bullish if you get over 2160 tomorrow and you close over that number. But then you have the next resistance at 2317. Right now, the bears, they have to defend that right there if they want to keep the trend down, but it's oversold. I don't think they're going to do anything. In the bonds, so what we had was a market that was in a downtrend. It found its way to the Bollinger Band as it did here. We had a bounce. This particular bounce, this low, tied in with the FOMC meeting. The market bounced neutral. When you lose an embedded reading, you typically go to the 18-day average of closes to fight a battle, and that's just what you've done. The bears won the battle. They've kept the momentum of the market via here down, the bias down, but they don't have the swing line going to the downside. So we had a bear market bounce, but not trending again. It's the same pattern in the 10-year note. Then we get to the dollar index. Now the 200-day moving average is finally coming in. Remember, futures are different than a cash market. You only trade futures the front month so long. It's typically, in most markets, 120 days to 180, a half a year, where it gets real interest in it. I'm not saying they can't be longer, but they don't trade with real volume. You got to go there and put in a bid offer, hope you get a fill, hold it for a long term. Why would you do that? But in any case, it's higher lows, higher highs, fighting at the upper Bollinger Band. We have the momentum up, but is it overbought? So both numbers are over, and this is still Monday. Over the 80, over 80, but not the day before, as you'll see. It needs a strong day tomorrow. Then I could say it's embedded and a different pattern starts coming from me. In the eurocurrency, down to the lower Bollinger Band again. I think the pros are covering shorts. You have an embedded reading. It tells me that they'll sell rallies in the market. I learned something when I was doing my online course. And I had to go over the weekend as I was putting in a final review. And I learned something brand new in the futures markets. And I won't share it with you, but I learned something that I proved it. I must have spent on this one review because I kept looking for a certain pattern to put as an example. It didn't exist. And it's in the futures markets. That's all I'm going to say. Interesting as can be, and that taught me something because now I know when not to press a futures market. Very interesting. And I went back to 2004 in my research, so I had a busy weekend. Lower highs, lower lows, bringing everything back up here to 138.55. That would be bearish, but you're oversold. Why get involved in oversold markets? Bitcoin on Friday stepped out of its downtrend. Here's the market. I said Friday. Today it stepped out of its downtrend. Here's the market and its downtrend. If you take out that number, you're through on the downside. Bollinger Band wouldn't have been hit. It happened today. So you end this level of the correction. You had 2 days that got away from the 18-day average, but you're back to it. Nothing that surprises me. Bullish markets overall, spend little time to the downside, and this is still very much a market that overall is bullish. The differential between Brent and WTI still favors the Brent. Why? Well, you're giving back a little, but it favors it because we got another OPEC meeting coming. They're determining what goes on there. We know what's going on in the U.S. You're seeing brokerage companies for the first time tell clients that they can buy U.S. oil companies in our basins because the big boys are not doing a lot of CapEx spending. I wrote about that last week in my full research report, and they're returning money. That gives them a good dividend and a product that's going to be there. And if OPEC can do the job of holding prices, the CapEx boys are going like that. They're just happy as can be. And when I say CapEx, the big boy's not spending the money. The little producer, he's spending and he's producing. That's what he's there for. In the Brent, higher lows, higher highs. You're out of your downtrend, but you're not over the 18-day average, not in an uptrend. WTI, it's the same identical pattern. Rebob gasoline, you know I mentioned to you, I thought this whole break was not going to last very long, and now you're back to the 18-day average. I think spring driving is going to be a real humdinger is what I'm talking about. Now remember, you hear me keep talking about my morning video, and because it's so important. At 5:40 I record. And I've already read what's going on in Asia, Europe, and the U.S. The reports in the U.S. coming out or something happened overnight. I'm giving you the glitch of it at 5:40 as to what you're starting to watch. For a lot of you, you're just getting up going like this. I will talk shorter term through long-term trades in this. On the weekend, I talk all long-term trades in this subscriber video using weekly charts. So, you know, once a week you get that, but if I see something big, I'll bring the weekly charts back in on the daily version as well. The cost of this is near nothing, $7.95. You know what a tick runs in the S&P? 1250. In most of the currencies, well, think about this, what they are. I'm talking some of the mini contracts, in fact. What are the currencies? $12.50 to $10. What is the gold on a minimum tick? This is less. You get 25, 30 videos in a week. So if you'd like to give it a try, do so. As I said, my online course is coming out for the enhanced Bollinger Bands. All of my paid subscribers get a discount, pretty good one. So if you're interested and you subscribe first, anytime you subscribe first, fine. Buy my course first and then subscribe, no discount. So you decide what to do. Go to www.iraepstein.com under the word research, subscribe, you'll be getting it. And you don't have to do anything, no coupons, by the way. The system knows if you're one of our subscribers or not. Take care.